already issued and published by CMA. So we are really very happy to discuss these results and any other questions that the shareholders want to, discuss it with us, or any questions that or inquiries they need to clarify. So you are most welcome, all of you. My name is Hamad Al-Maghdari. I'm the CEO of the company. In front, next to me here, Mr. Heron, he is the CFO, and also Ms. Shaima, she is the compliance officer in the company.
Basically, this is your section. If you have any questions, if you have any issues to discuss, you are welcome. So we are ready to accept your questions and discuss.
Good afternoon, gentlemen.
Yeah. Good afternoon.
This is Joyce Matthew from United Securities. Congratulations on the good set of numbers. It's very happy to see that we are coming out of the pandemic doldrums.
Thank you.
My first question, and I'm just to get familiarized with the company, and if it is correct, my assumptions are correct. So how many sites do we have currently? Is the number 225 is the correct one? And what are your plans for adding new stations in the future?
You mean the number of filling stations in the country here?
No, for AL-MAHA.
Yes, we are now about 248. Yani
Okay.
we add some filling stations since last year, and there is a plan, but the plan is a little bit slides. What we call it, modify to what you call contains the future requirement for the energy sources like electric vehicles and also the green energy. This is the new stations we have now, all equipped with that. And we changed the concept of station from a filling station to a service center, which is include or contains services for vehicles, other service like groceries, and also fast food, and what is the, we call it, a daily requirement of the customers. This we done it basically a result of a study for the market. So what is exactly the customer need or the consumer need? So we are adding some services there. That's why we change the concept from a purely filling station to a service center, include all requirements related to vehicles or related to human consumptions daily, like groceries, pharmacy, and fast food, coffee shops. All this, what we call it NFR, non-fuel revenue for the company.
Okay, and how many stations, new to the industry stations, were added in the last 6 months?
In the last 6 months, usually now we add three, actually. Three
Okay.
stations already commissioned, and there is 3 stations under construction. We have also other projects which called revamp project. What is meaning of revamp? The old station, after 20 years of services, now we have to revamp it, to renew it for catering the new requirement. And this is based on a plan for maximize the profit of the location where we are available. That's what we do, and that's what we are going to continue doing it.
So if I understand that correctly, for 2028, you will be adding total 6 sites and certain revamp of certain stations, basically the rebranding and all the stuff.
Yes, exactly. That's what we do. And also what we are doing, actually, there is a plan which is also not only in the retail business. Al-MAHA, they are doing bulk business, bulk fuel, which we call it here or name it as a commercial fuel. and that's serving big customers like government, airports, air bases, and ministries, or like Ministry of Defense, BDO, Occidental, all these big player in the market. We are serving them in long-term contract. For example, contract of BDO is for 10 years, and contract in the airport also almost 10 years. Minister of Defense, and this customer, they are purchasing bulk fuel from us. We deliver the fuel to them, and they are managed to operate the system there, which is like Minister of Defense. It's under our supervision, but they are managing from day-to-day business. Yeah.
Thank you, Mr. Hamad. I'm for touching upon the commercial side. I have more questions on the commercial side, but on the retail side, if we stick to the retail side, can you give us some color on the current average throughput per site for the first and second quarters? Because and how do you see the throughput evolving over the last 2 quarters, and maybe in the future, do you see any further volume improvement?
Are you talking about the growth of retail sales in terms of volume?
Yes.
Yeah, the stations, retail stations are going up now. All the stations are showing good margin, good sales in the last 6 months. And as you know, the next 6 months would be a challenging one, and we expect the increase in the retail sales in the next quarter also will be higher than what we recorded in the first quarter.
So, so what's the average volume that you sell in per station currently?
What we are doing, actually, the averages varies from 40 per year, or per year we are expecting some station to reach 40 million. But when you go on the average side, it is almost about 7 to 10 million liter per year. So some stations can say, sales like here in Muscat, 1 to 1.3 million liter monthly. Some station is less. That's the less station. That's what we are working on it to improve the service there, and also gain more throughput and more customer.
Yeah, my question is on the average per month. You said you're talking about 7 to 10 million liters per. This is per year, right?
Yes.
And how do you see the volume uptake happening, especially given that we are coming out of the COVID restrictions and everything? So how is the last 2 quarters trend? When you compare it with first quarter to second quarter?
About 24% more than last year. This is the up to June 2022. And this is what we are doing actually. So the volume is increased very good amount, and actually if we are going to be in more detail in this, monthly we are consuming about 104 million liters. This is the last one was June 100 and almost 100 and what you call it 34 million liter.
Higher than last year.
So the higher than last year is almost about 30 million.
Okay.
That's monthly.
Okay.
Monthly, yeah.
So, Mr. Hamad, what do you think is driving this volume growth? And do you think this is a sustainable level, or do you expect more volumes to come?
The expectation is, there are good, what we call it, movement in the economy. And, when there is growth in other sectors, it affects us directly, positively. What we see, there will be more and more increment in the volume, because the expectation, the growth of the economy is higher, the coming year. So what we are looking for, more and more volume to be for the next half of this year, and also for at least the coming 3 years. That's our business plan built on.
Okay. So see, we have a relatively higher number of sites in northern Oman, and which are closer to the border. since there's a huge price differential between UAE and Oman in petrol and diesel prices, do you see any particular advantage in terms of more volumes in these sites?
Yeah, actually, without that calculation, because what we done, actually, we calculate or we set our plan for this year before this increment or before this high demand happening in some of the station we have on the border. So that actually, the actual business plan for this year was, expectation was really high than last year, and that's what we crossed it. What is happening now in the border, it's an add value for us, to be honest, Yani. And we are looking for it as a temporary, because, you know, this is due, as you know, due to the mismatch between the prices of the fuel sales here and to cross border. We are not that much looking for what is going on in the border, to be honest, because it is, we calculate it as a temporary income, which is, yeah, we enjoy it now. But if it is not there, we still looking very positively for the growth inside the country.
Okay. And do you see any challenges for supply to these border stations? Because earlier, what I understand is we had quotas assigned to border stations in early 2010s. So is there any restrictions like that, or are we free to supply whatever demand that comes from these border stations?
No restriction, to be honest, till now. And there is, we didn't hear anything or any restrictions. Everything is going smoothly. Yeah, you know, the only restriction happening because of sometimes the availability of the transportations, these tankers. And because when you cross the border, there is a procedure need to be applied. And this, some delay happening, but that delay, it is controllable delay. I mean, not that big. A tanker or a fleet of transportation tankers can take 3-4 hours more. We calculated and we cover it by the storage tanks we are having in this filling station crossing the border.
Okay. And when we come to the commercial side, yes. I'm seeing the second quarter, there has been a significant improvement in revenue. See, your commercial sales has increased by almost 42%, and other lubricants and others have increased by 75% on a quarter-on-quarter basis. But at the same time, in the company report, you have mentioned that you're facing challenges from the commercial segment, and the volume uptick is still lagging behind the retail growth. Can you explain this particular phenomenon, and what's your outlook, especially when it comes to the commercial? Can we split it into the commercial diesel, aviation, and lubricants?
Yes, thank you. What happened actually, commercial is reflecting directly what is going on, the activities in the market. So we have a different type of commercial. If we look at, for example, the natural commercial sites like, you know, factories or crushers and all these commercial business to the market directly, that increased. We have other side of commercial, we call it power plant. We are supplying power plant, especially the power plant which is using diesel fuel for generating electricity. That, you know, that's natural, is decreasing because as per the government plan and electricity sector, they are in progress of closing some power plant and connected to the main grid. And that affects us from commercial side, because this power plant consume highly daily, especially in summer, as you know. We have other commercial plant, commercial sides, which is aviation. Aviation is, we classify it as a commercial, but as you can notice it, we put it as a different segment, but that's also as a part of the commercial. There is a very big jump, which is about, from something like 346% jump, which is really very high due to the movement after COVID and usage of the people traveling, and a lot of what we call, we have a lot of stake in, or big stake in like Oman Air and other airlines here. So there is a big jump happening there. So in total, commercial is affected directly by the situation in the market. When the COVID is really in high side, we are really almost very low in commercial sales. Now everything is come or almost smoothly in natural back. We are really return gradually in this business. But the main effect for us or as a sales is the power plants closing here and there and connect this to the main grid, which is using gas. The other, there is competition, of course, because the market is very healthy. So competition between the three licensed companies in the market. Of course, we are losing some time. The other competitor gaining. This dilemma is going on because, and this is my personal call this opinion is healthy. Sometimes with us, sometimes with our colleague or competitor in the other side, due to the when these contracts, especially long-term contracts. But we are really in a good shape till now, and we are looking forward now for new tenders coming up. And really, we are participating very strong. We gain some big players in the market, especially in oil fields. Oil fields controlled by AL-MAHA to almost 100% now, as per the new contract. All oil fields supplied by AL-MAHA. We gain some new exploration companies in oil, especially like consumption of about 3 to 4 million monthly, and that's really add value, can substitute the loss happening in the quantity of the power plants.
Okay, that's very interesting point. And on the aviation contracts, is it a 10-year contract or a 3-year contract that you have with Oman Air? And well, can you throw some light on the airport supply contracts? Because earlier it used to be a 3-year contract, isn't it?
No. With the Oman Air, especially we have a joint venture with international firm called Chevron. That's different contract. That is really 10-year. That's for international airline. For local airlines like Oman Air, they are doing it every 2 years. But for the last 3 contracts, we are really controlling 50% of Oman Air consumption every contract. Because also these companies, they are sharing the contracts of supply between different companies to secure the supply. But for Ministry of Defense, it's 10-year. BDO, it's also 10 plus 5 years. Oxy, also the same 5 year. So, but the other, which is them for example, for aviation, which is Oman Air, they do it every 2 years.
Okay, so when are these contracts coming for a renewal, or is there plenty of time left, or are they due for renewal in the immediate past?
Oman Air will be this year.
Okay.
Yeah.
And PDO and MOD contracts?
BDO still there is 10 years ahead.
Okay.
Yeah.
MOD?
MOD is still 7 years ahead.
Okay. That's very comforting. And what's your outlook for the FIFA World Cup increased aviation traffic? We are hearing that there will be almost 48 flights a day flying to Qatar, Doha, on a daily basis for 1 month. Will it be some kind of beneficial for us, or is it going to be filled from Doha itself? Do you expect any further?
Actually, yeah. We are looking forward for it because Oman Air will fuel naturally from Muscat International Airport, which is we are have a contract with Oman Air. So definitely there will be an add value. And definitely there will be increase in the consumption of jet fuel from AL-MAHA in Oman Air side. And that's we already discussed with them, and we are prepared to be ready for fueling these aircrafts. We know there is about 42, I think, air flight every day, which is really will be a good, what you call this, sales for us, inshallah.
So this will be in addition to the normal traffic, isn't it?
Yes, yes, yes. This is an addition. Yeah.
Okay. Okay. And when we come to your margins and everything, we see the gross margins is improved by 50 bips. And that's a significant jump when, especially when we talk about only 5.5%, 6% margins. What are the reasons for this? And where do you see that these gross margins getting stabilized? Or where do you target these margins should reach in, let's say, maybe in 1 or 2 years?
I will let the CFO to answer this question.
See, the increase in international prices, of course, will increase our gross profit. Yeah. So you can see that that's why our gross profit has gone up compared to 6 months of last year. So yes, that is more or less stabilized now. So we expect the gross profit to continue with and at the same rate if the international prices keep the same level. So we don't know the longevity of the high oil prices, how long it will continue. So, but overall, the gross profit ratio has come down mainly because of the increase in the international prices. So, in terms of gross profit on Riyal Omani basis, it is more or less the same. And of course, if you look at the if you take into account the increase in international prices on the gross profit, yes, it has gone up, but the GP rate has come down mainly because of the increase in international prices. So this is, I mean, this will continue. But we expect the gross profit growth will go up at least for the next 1 quarter or even till the end of this year. So on the basis that the international prices will remain at the same level throughout this year, for the remaining period of this year.
Okay, perfect. Thank you for that. And in terms of profitability, where do you see the profits growing and getting stabilized? Should we expect we going back to 2014-15 levels where our run rate will be around 9 to 10 million riyals? Or what's your view on the blue sky scenario? Where is it taking us?
No, you're talking about 2014 and 15, where that's a totally different scenario altogether. Because if you see the things, the factors that affected after 2015, when subsidy was removed and it was linked to international prices. So we are not looking at going back to 2014 profitability or 2015 profitability, but we are. That is a golden period, if you say. But now we are not looking at that growth, but it will be, yes, we will be reaching our budget with this rate, and it will be better than at least it will be at the 2019 level. Probably that's what we expect. We can.
Okay, maybe 100 by IPS to target.
Yeah, that's what we are looking for. Maybe better. But what we are doing, if you notice from the report, there is something called diversifications in the company itself, in the business. Because, first of all, we are very fully aware, dependent on oil in business will reach somehow to a reduction rather than increment. Why? Because of other resources coming in like electric vehicles, hydrogen, and LPG. And this is not far from Oman. Second thing, to secure the shareholder interest and secure the shareholder money, we adopt a plan of diversifications, not depending only in our revenue from selling fuel to products or oil products to the market. We are providing other services, which is really other sources of income, and this income is also contribute in the net of result of the company, and that's what we are really working with the board to go ahead with these types of diversification. Our main business will be continue the same. In the same time, we have to be ready for the future, which is in my view, the future is not long term. It is very short term future, which is very short looking forward. I mean, the depend on fuel, as you know, I'm sure, and others. There is a big change going on these energy resources, and that's need the company to be really what you call it, ready to contribute in other business and making the shareholder always in safe side.
Okay.
Our expectation that the net will be increasing, of course, definitely will be increasing. Yeah.
All right, thank you, thank you. And how do you see the capex plans right now? Now we are just adding six stations every year on an average. But you just mentioned about the charging stations and everything. So what kind of capex we should be looking at for the next 3 to 5 years? If we can put it on the basis of let's say maybe a capex to revenue percentage, something like that. If you can give throw some light on that, that would be much appreciated.
Yes, what's happening actually, the capex is for investing in new service stations, as mentioned. It should not
actually
it should not increase, or it should not be more than that's our philosophy, is not more than what is the total capacity of the company shareholder, or I mean total they call it no, the حجم الشركة, the value, yeah, the value, the book value. Second thing, we are totally not dependent in any I mean long term loan. Why? Because I don't want to enter in something called dangerous of loans draining us in loss of some revenue for the interest or whatever. Yeah, we can cover this loan because everything is a feasibility study, but we are really controlling the investment in the new station with the only benefit and correct location, which is can return back all these capex or all this investment within the time frame of 7 years. And after that, we are enjoying what we call it a profit of that location. Also, we add in this capex of the main fuel business, other, as I mentioned, other business, which is really, the IRR is high and can contribute correctly to the bottom net of the revenue or the net of and the result. Third thing, till today, we are not crossing 6 to 9 million real every year investment, including new projects and revamp and renovation of the old and existing business we have.
To add to that, retail continues to be our main investment segment.
Yeah.
And apart from that, we also going to invest in the automation of the filling stations and all the processes in terms of ERP and all. These are the major other investment.
Which is help the company to manage its operation correctly and better.
Okay, thank you, gentlemen. Thank you, Mr. Hamad and Mr. Harand. Thank you. I have a few more questions. I'll take a step back and allow others to ask the questions, and then we'll come back later.
Thank you very much, Joyce. Thank you.
Thank you, Matthew.
Hello?
Hello, gentlemen. Anybody else wants to ask
Hello?
a question?
Hello?
Good afternoon, gentlemen. This is Bishan Bhalla from Vision Asset Management. Thank you for the presentation and for the answers so far. I had a couple of questions. The first is for the CFO. We've noticed an increase in the loans in the second quarter from 29 million to 55 million. If you could just, is that short term in nature? If you could just give us your thoughts on the same.
Yeah, it is straightforward. It is basically with the increase in the international prices, our fuel purchases in terms of value has gone up. So the it has seen a significant increase, especially in the last 2 months of the second quarter, that's May and June. So the total fuel purchases from OQ refinery has gone up, mainly because of the increase in the international prices, which has seen sharp increase. And of course, the volume also has gone up. So we take short-term loan to finance the OQ fuel bills. So that is why the increase in the fuel bills has increased the bank borrowings during this period.
All right, understood. My next question is a follow-up to the question asked by Joyce in terms of margins going forward and sort of pre-pandemic levels. Now, as I understand, there was a systemic shift in 2018 due to a couple of factors. One was, of course, uniform fuel price margin for retail products, along with the shifting of the terminal from offtake, the upliftment shifting from Mina Al-Fahal to Jifnin. Yeah. Could you just explain to us in terms of margins, what contraction has these activities had on your margins from a margin perspective? And then I can follow up with my next question.
Yeah, the shifting of refinery depot from Mina Al-Fahal to Jifnin, yes, has affected our margin significantly because now those depots were Mina Al-Fahal depot was owned by us along with Oman Oil. Now we are paying 3.8 paisa per liter of fuel uplifted in Jifnin. Yes, that has caused a big decrease in our margins. Now, yeah, that affected us. Overall, if you see, since both the selling price and the purchase price is regulated by the government, our margin in terms of real money remain the same. So with the increase in the international prices, you see decrease in both the ratios, gross profit ratio and net profit ratio. So if prices, international prices continue to go up, going up, or it remains the same, but overall you see decrease in these two ratios because of that, but because of that particular factor.
Yeah, I understand that, but that's fairly straightforward. Now, just a follow-up on the margins. You mentioned that the uniform price margin took place in 2018. Could you just explain what the difference in margins was pre and post implementation? So what is the margin before on per liter sale of fuel before 2018 and what it is after that, so we can appreciate how much impact it's had? I understand on an absolute level, as sales go up at a higher price, the margins will come down. But what was the margin impact? If you could just explain that to us.
It was on an average. It was we didn't have the unified margin for all the products that by then. Then it was for each product there's a different margin. So on average, if you see the margin was higher by 4 to 4.5 paisa higher than on average. Now with moving into different depot, so you have seen that almost 4.2 paisa decrease in our margin. So that is the difference.
So that's the impact on a per liter basis, 4 to 4.5 paisa.
Exactly. Yes.
And along with that, you mentioned 3.8 paisa per liter is the upliftment charge at Jifnin. So yeah. net, if I were to understand, that's almost a 8 paisa impact per liter. Is that the right way to look at it?
That includes that this 3.2, 3.8 is included in that. So we are seeing the net difference of around 4 to 4.2 to 4.5 paisa decrease in the margin before and now.
Understood. And just to understand from a regulatory perspective, is there any indication or is there any discussion with the regulator for any further charges or any other change in your current margin structure, just to understand what the risks are going forward?
Yeah, see, now there's an issue on that. Now our margins have not been revised since for the last 4 or 5 years, but the costs are going up. So our margins have not gone up as fixed by the government. So we are in touch with the ministry, and we are looking for a favorable response from the ministry in terms of increasing the margin. But if they consider in our favor, then probably the margin would go up to compensate the increase in the costs that we are experiencing now.
Understood. So given the current operating environment and where we see margins, it would be fair to say that the maximum the company can achieve on a bottom line margin basis is what we've seen in Q2. Or do you see further expansion from those levels? Because the reason I say that is we had witnessed margins of almost 3.3%, back in the day in 2012, 13, 14. And post implementation of these charges, we've seen margins drop. Now, last quarter, your margins are 1.38%. Is that what is a realistic margin going forward at the current operating environment?
I think that's a fair assume that it will be at this level going forward. And we're also keeping in touch. We're also looking at the challenges what we have in terms of alternative energy, renewable energy, and the development on the side. But this is less significant. I don't think further. In the long-term basis, yes, it may be, but in the short-term range of or medium-term range, these ratios will be achieved. It can be achieved. I mean, it will remain at the
okay,
same.
understood.
Yes. Yeah.
And the last question with regards to sort of your free cash flow or dividend payout ratio. Historically, the company has maintained between a 90 to 100% payout ratio. Is that trend set to continue going forward? Because on an absolute level, your profits are going up. So EPS on an absolute level will go up. Is that something one can assume 100% payout on an EPS level?
See, we have maintained a good dividend ratio all these years, and that is mainly because we have because on the strength of good retained earnings what we have built up. So of course we won't cross the 100%. We don't expect that to happen, but again it's a decision that will be taken by the shareholders, and so that's something which I cannot comment on that. We cannot comment on that now. So, but since this time we paid 100%, dividend, because of COVID we could not declare any dividend in 2020. So again it depends on the strategy of the board, and so dividend is something which I hope it will continue in the same way. So but it's too early to say anything on the dividend at this point of time.
Noted. Thank you so much, gentlemen. Wish you all the best.
Thank you, Bishan. Thank you for attending.
Hey, good afternoon, gentlemen. This is Samir.
Good afternoon,
Samir. From UFG. Hi, good afternoon. How are you?
Fine, thank you.
A couple of questions from my side. First, on the balance sheet, you have almost 47 million cash, and you have been holding such a big cash position since long. So why don't you pay out your debt and save some interest on that to improve your net profit?
Yeah, the arrangement what we have with commercial banks is the short-term loan what we take to finance the OQ fuel purchases is normally fixed for a 1 month period. So why we do that? Because then we can get a better interest rate, lending rate, if we do it for one complete month. Now the cash collection that comes during this period is kept in the call deposit separately. So we won't adjust the cash collections against the bank borrowing, because then we won't get the same lending rate. So that is why you will see bank balances at an increasing level, because that represents the collections which are kept in the call deposits, which will be utilized to set off the short-term loan when the short-term loan matures, normally on the 15th of each of every month. When there's a time when we pay OQ fuel bills.
Got you. And among your various business segments, which one is more profitable? And also in the chairman's report, you mentioned about the commercial and the aviation segments that will be challenging. So does that mean it's a tough business?
See, of course, the major retail continues to be our most profitable segment, no doubt. But the increase in international prices bring more revenue, more profit in the aviation sector, and of course in the commercial sector. But retail continues to be the most profitable segment.
Understood. Thanks a lot, gentlemen.
Thank you.
Yes, please.
Any more questions?
Just a follow-up questions on that. Since CEO has mentioned that you are now renegotiating or renewing some of your contracts already, does that mean are you expecting any improvement in the profitability or gross margin in that commercial or aviation segments?
Yeah, of course, yes.
Yes, actually, that's what you are looking for. I mean, when you have a long contract and it came to the expiry date, there will be, of course, some benefit and some also what you are really looking forward to amend it or to improve it. And this improvement always is a profit or add positively to the profit side.
Okay, understood. And one final question, like you mentioned about, the second half would be a bit challenging. Did I hear it correctly? Or so what is that challenging factors?
Maybe it's too optimistic, to see if we say the same pricing, oil price will continue to grow, will go up, continue to, or it will be maintained at the same level, or it will remain at the same level. So it all depends on, it's too uncertain to say when, how long oil price will remain the same. It all depends on the geopolitical factors. So now if the prices of oil goes down, say for example, if Russia and Ukraine conflict goes settled or something, so if the oil price falls below the normal level what we saw, that could be a bit challenging in terms of when you compare with the first quarter. So you will not in that case, in that scenario, second quarter will not be better than first quarter. Yeah, second half. Second half will be. We have to be careful on that.
Understood. Thanks a lot.
Good afternoon, gentlemen. My name is Abbas Muslimi. I work for Vision Asset Management. Thank you very much for the call, and thank you for so patiently answering all the questions so far. Mr. Hamad, I had a question for you. You spoke about, how you're looking forward, and you don't want to just be you just don't want to make money on selling fuel. You're looking at diversification, and you spoke about green energy. You spoke about some of the initiatives that are happening in the country. Could you clarify what role can MAHA play in the diversification efforts of the company going forward? I mean, beyond fuel, what could you do which could aid in adding to the sort of top line and profitability for the company?
As I mentioned, the fuel will continue the main contribution to the revenue of the company, whereas also we are reading the future as per what is the studies going on internationally and nationally. So there is also electric vehicle coming on the board. These electric vehicles, you are fueling your car now or your vehicles for 5 minutes, 3 minutes to 5 minutes. When this electric vehicle came, it will take longer time. Our vision here in AL-MAHA to fuel or to recharge these batteries, it should be 100% green. So what we are going to use, we are really thinking very serious and studies going on using, for example, solars, maybe wind, to recharge these vehicles. And also it will take longer time, meaning longer time, you are really as a vehicle driver or who are there, he need to also, cannot be staying in his car for 10 minutes or 15 minutes. That 15 minutes, actually, we are now doing what we call an enjoyable places for these consumers or customers, which is return or maximize or add value and revenue to our location, meaning of what? Providing other facilities like coffee shops, groceries, or place where he can spend that 15 minutes. And that's what I'm looking for. This is actually now international studies how maximize location of the fueling station, whatever the media of fuel, to let more and more sale or more benefit from that location. That's why I said diversification. We didn't mean we are changing completely our activities. No, it should be in the same activity, but in different picture, which is, covering the new technology come in there. So this
very,
is
very clear. Thank
yes,
you.
yeah.
Right. And so do you have like a target in terms of how many number of fuel stations will you convert to, let's say, a full service station where you can get more sort of revenue opportunities? Is there an internal target that you have in mind?
Yeah, now we are doing 3 of them, mainly here in Muscat, which is really in a big size, in Ansab, in, Rui will be one, and also in Mabele. We are looking forward for the other 3 also to be in main city like Sohar, Salala, and also in Ibri side. So, and also we will cover other government. Our aim is to convert all the major stations we have to be a major service centers, which is include all services, or almost all the service required.
And this will happen over the next 5 years, or you have a longer term plan for this full conversion to happen? I mean, I'm not talking about the new stations. I'm talking about the existing stations.
Yeah, it will take more than 5 years, because we are limited with resources, so we need to do it according to the priorities and also more benefits from that location.
Okay. And my second question is, when you're talking about oil prices, and the challenge that the CFO mentioned, that if oil prices continue to remain under pressure or go down below the first half levels, you could see an impact on performance. Now, here's my confusion. When it comes to the business, when it comes to the retail business or the commercial business, are you working on a fixed real margin per liter? I mean, because and then, I mean, if that's the case, then do you mean the concern that the operating business environment will slow down and hence commercial sales will come under pressure? Is that what you mean, the risk of higher or lower oil prices is? Or you actually work on a margin basis?
No, we have a fixed margin, and very well, maybe, I mean, this is the tariff of this fuel in Oman internally is regulated. So the margin is fixed, but we are also have other business like bunkering, aviation business. All this is based on international prices. There, the margin is not regulated as per what is for the vehicle in domestic area, in domestic or internally in the country. That's what we mean. Also, when the price high, usually there is a good enjoyment for the economy and activities increase internally or internationally. So more demand will be, and that more demand give us more sales, which is also results in more profit. The margin is fixed. We are not changing at all the margin here. So that's what I understand. Maybe CFO have other words.
Yeah.
Okay, I understand that, because I was also thinking that you're working on a fixed sort of real X number of paisa per liter.
Fixed internally. Yeah.
But the other business is not. And if you see the second quarter results, and I think a colleague of mine asked this question, there was a big jump on the net profit level, and you've given a very good breakup in terms of where the revenue increase came from. So given the current situation, you feel the second quarter numbers are sustainable on the bottom line and the top line basis?
Yeah, it's sustainable at least for the third quarter. So now fourth quarter. Third quarter.
Okay. And Mr. Hamad very nicely sort of spoke about he welcomes competition, and especially competition is heavy on the commercial side, and today someone else has won the contract and you're very pragmatic about it. You were not complaining about competition, you were not mentioning that they're undercutting me. Generally this is what we hear, but you were not talking about it. So it's very it's refreshing to hear such a pragmatic view on competition in the country when it comes to the commercial side. My question on that, sir, is yes, sir. Please, yes, tell me. Yes, sir.
Mr. Abbas, actually, competition is always healthy. When there is healthy competition, everything will be better, because at the bottom end, you are serving communities, and these communities are really deserve a good service coming from high competition. And of course, we are not compromising for high margin, or we are not compromising for also low services. We have also to live as a company, because there is an investment on it. But for me, actually, I like competition, because always healthy market have good competition.
And sir, I mean, I completely take your point, but you mentioned something on the call, which is something to be proud of, that you mentioned that 100% of the oil field business is serviced by AL-MAHA.
Yes.
But in a tight market like Oman, where everyone enjoys, very good technological advance, technology behind them, good shareholders, strong shareholders, both in Oman Oil and Shell. Is that something that you worry about, that you might lose this business? Because these boys are also backed by very, very solid shareholders. Yeah, I'm talking about your competitors. How do you maintain this grip on this business?
First of all, as you know, competition produces high efficiency. And we
Right.
are all of us very high efficient and know the market very well. Second thing, there is contracts. So when you secure the contract, it should be with you for a certain period of time. And that's what exactly I meant. So when we are in the end of the contract, of course, we will come to a bit of worry.
Okay.
Yeah, that's the different. But for the services, we have to always fight to give better service and quality.
And these oil services contract where you almost have 100% of the market share, what's the duration of these contracts from today?
10 years.
Mashallah. Okay, so you have very good visibility on these contracts.
Yes.
And my last question, sir, is the retail sort of fuel sales is a function of, I mean, of course, COVID came and it created a lot of issues in the country, but alhamdulillah, COVID is behind us now. And when you look at the retail, it's nothing but a function of population, right? Now, when you look at the commercial fuel, now let's not talk about MAHA. Let's talk about commercial fuel entirely in the country, commercial fuel sales as a totality. And if you go back and see from the 14-15 levels to now, what I have difficulty understanding is as when we look at the economic indicators, things have grown, the economic GDP has grown. But I think commercial fuels as a whole has come down in a big way from 2015-16. What do you think it will take for commercial fuel sales to go up? And are you seeing signs of that happening on the ground as we speak? I mean, of course, there's a lot of positive sentiment with oil at $100 in our country. But do you see commercial fuel as a big growth opportunity?
Yeah, if you look at if you link the increase in the oil price, that brings to that regenerates the economy. So the government spending will go up on infrastructure projects. That definitely will bring our revenue, more revenue for us. Now, in fact, our CEO was mentioning this particular fact, which is the infrastructure or that's provided by the government is sufficient for 10 million people. Probably CEO can more brief on that. So we have
actually the commercial sector always depend on the activities in the market itself. When the market is going well, more projects there, more business there, of course, there is more consumption of fuel because everything depends on fuel. Fuel is the key player in any development. I mean, you need logistics, you need everything is depend on it. So that's what we are looking. We are looking really very forward. According to the vision of the country, we see there will be a big what you call a chance or a big really big investment coming in here. This investment, of course, is calculated as or resulted in a big construction here and there in industry side sector or in other trade sector or in storage, everywhere. So when you look at the vision of the country, really you feel there is a good what you call demand will be happening in fuel for the next years. And that's really very interesting because, as I mentioned, every movement need logistic. Logistic depend on fuel. And that's what we are looking will happen, inshallah.
Yeah, inshallah. It makes sense to me. And my last question to you is there any plan for geographical expansion? Like one of your competitors, are you looking to add few stations?
Yeah, it has become like, we are really looking forward for international expansion and we are very serious, but we are not in a hurry. Why we are not in a hurry? We are studying the market. We look forward to be in maybe in GCC or also other continents. Our focus as AL-MAHA now in lubricants. We are really going very, very serious, and growth in lubricant sites or export sites is really very interesting. It's doubling every year, and that's very promising. For the fuel, yes, we are going to outside Oman, but in a very calculated steps, because this is required an investment, and when you require the investment, you have to be very careful. You have to do a very detailed feasibility study on the location and also in the country where you are going. Then after that, you have to raise the matter to the board for the decision. So that's what we are doing. Yeah, that's it. There is serious.
Understood. Yeah. Understood. And I remember speaking to Shell many years ago, and they had told me that lubricants is the high margin business, and they had the only lubricant plant in Oman. And that's where they were enjoying some of a higher margin sort of profits coming in. Is that the? I mean, is it that the margins are pretty high and there's no big supplier of lubricants locally except Shell, where you guys have your own plant right now in Oman for lubricants?
You mean the margin in lubricant?
In general, I mean, I just wanted to confirm a couple of things. One is, you have your own lubricants manufacturing plant in Oman?
No, not now. I mean, we have other lubricant and other sites, or not in Oman, but in the same time, yes, it was really the lubricant margin good. Now, many blenders everywhere. I mean, many players in the market, but still, it is easy to export a commodity rather than invest in a filling station or service station, and then after that you look. This is just only an export. Containers coming, container going, and that's it. You maintain the quality as per the international standard and Omani standard, of course. I mean, that's what we do. So that's why when there's a margin, margin is there, but it's varied. Being very frank with you, is not like enjoyed before. No, there is a reduction because due to high competition, which is I'm really like it. Yeah, margin is high, good, but in the same time, when there is competition, quality will be always high.
Thank you very much. That's final. I mean, that's a great comment. That's a great closing comment from you. Thank you very much for your answers and for patiently answering all my questions. All the very best to you.
Thank you, Mr. Abbas. Thank you.
Thank you, sir.
Almost coming to the end of this session.
Very fast.
Do you have? Do you have any questions? Any more questions? We are ready to answer. Otherwise, we'll. If there is no answer, better we conclude this now. I think it's 2 o'clock. Any more questions, please? Wait 1 moment.
Yeah, 1 moment. Joy, I have a question. I think he left. He's there.
Joyce, Matthew, you said.
No, it's thank you very much. It's all answered very beautifully, and wish you all the best. Thank you very much.
Thank you for all your support and comments. Thank you so much, Dave. Can we conclude this session now?
Yeah, I think so.
Thank you so much.
Thank you very much.
Thank you.
Thank you very much, gentlemen. Thank you. All the best.